Good morning. Good morning to each and all of you. It's my pleasure to welcome you to this, our second annual Milken Institute Asia Summit. You are among 400 leaders, major investors, senior government officials, heads of family businesses, directors of sovereign wealth funds, philanthropists, and others who have joined us and will be joining us for the next 2 days. We want to thank you for giving us your most precious gift, your time, to come and join us, because we firmly believe that powerful ideas spring to life when you bring together leaders with the commitment and the capacity to get things done, to influence the world, and with the openness to see the world through different eyes as they hear other ideas. Over the next 2 days, we'll address issues that impact and shape the global economy, with special focus on those of greatest importance to Asia. We know that developments in Asia exert outsized influence on the global economic outlook, they influence public policy, and they shape corporate strategy around the world. For most of the countries in the region, the key challenge is achieving higher levels of development and more inclusive and sustainable growth. The Milken Institute, working through our Singapore-based Asia Center, is here to help to achieve this goal. The work of the Institute includes purposeful convenings, such as this summit, and it is anchored on independent, data-driven research. Now, just this week, we released 3 reports on issues of great relevance to Asia. Our research team rated and ranked the best performing cities in China, analyzed the state of trade finance in Asia, and explored how the demography of aging is remodeling and remolding Asia's labor force. Now, you'll find all 3 of those reports in your conference bag, and you will also find the notebook that has today's program. You'll also find in that program some of the names of speakers may have changed since it was printed, but I would urge all of you, if you haven't done so, to download the Milken Institute event app, which has the full program and full biographical information on all of our speakers. Now, the very topics in our research reports and the topics in the panel discussions that you'll be hearing today over the next 2 days will give you a sense of the range of some of our work. At lunch today, you'll see a video that'll explain more of the range of our work, our various centers, and will give you a taste of what we do. We hope that many of you will be able to join us, if you haven't done so before, in Los Angeles at our annual Milken Institute Global Conference, where we have 11 separate tracks which cover more of the types of work and the things that the Institute does and focuses on. Now, we would love to talk to any of you about what the Institute is doing here in Asia and any ideas that you may have for how we can be more impactful and helpful. And with that in mind, please feel free to seek out not only me, but any of my colleagues from the Institute while you're here. All right, now let's move on and start today's program. Our opening session is A World in Turmoil, Finding Opportunity Among Volatility. That is probably a title we could use at different points almost every year, so we may save it for the future. We're just delighted to have a very distinguished panel, and Haflinda Aman of Bloomberg Television is going to moderate this panel. She's based here in Singapore. She's been the head of stories, at the head of stories that have driven the transformation of Southeast Asia. Her wide-ranging interviews for Bloomberg have included world leaders such as Paul Volcker, Timothy Geithner, and the founding father of Singapore, Lee Kuan Yew. She's a Southeast Asia correspondent for First Up and High Flyers, a series of interviews with Asia's business elite. So please join me in welcoming Linda Amin and our morning panel. Thank you.
Good morning. When you take a look at developments over the last several months, it's tempting to say that the world is in turmoil. When China devalued its currency, markets went into a tailspin, the movements were so violent, they were reminiscent of the financial crisis. The thing really is that some people out there think that the devaluation signals a China that is slower than most of us expected. And that devaluation prompted what some say, well, some are calling currency wars. Central banks jumped in, raising concerns that perhaps they're burning reserves rapidly. Wow, that's a huge heading in itself. Then comes the other factors. The commodities rout, Brazil getting downgraded. Now we have a migrant issue in Europe on top of the lackluster growth, and the perennial question, will the Fed do it or not? So, amid all the volatility, all the uncertainty, where is growth? Can we talk about growth? Where will you make money? And to answer those questions, well, we have Mike Milken, Scott Minard, and Piyush Gupta, people who I hope will have the answers today. Gentlemen, let's start with China. Put it in perspective. Has there been an overreaction to what's happening in China? I know you're a China bull, Piyush. You think so, yes? An overreaction.
Well, yeah, so I think you've got to frame it from two lenses. I guess the first lens to me is from an operating lens and a long-term lens. The second is from obviously a portfolio manager lens and a more short-term lens. I think from a long-term lens, if you go back to any literature, economic literature 5 years ago, and you go back and reread the policy prescriptions that were cited for China 5 years ago, too much fixed asset investment, so cut down on that, increase consumption and services, reduce manufacturing, reduce exports, quality of growth, effective or quantity of growth. And you look at what the Chinese have been trying to do over the last 5 years, it's a one-on-one match. So if, frankly, by policy prescription, the Chinese have been doing exactly what people thought they should do. And even more, the Chinese have been doing what they said they would do. So if you go back and see, even earlier this year, first quarter this year, Governor Zhou of PBOC laid out a blueprint for what China would do this year, and said we will liberalize interest rates, we will deepen capital markets, we will open, QFI quotas, we will get to a greater opening, and we will let the currency value adjust. Right? So the problem is most people didn't take them seriously. And the reality is that they've been quite clear about trying to go down this path because they recognize this is important for them in the bigger scheme of things. I described this economy some time ago. So it's growing somewhere between 6 and 7%. It's got a consumption growth of 10 to 12% real, and inflation's down. So if you add that, it's actually probably 13, 14%. It's got real wage growth of 8%. It's got a massive foreign exchange reserve surplus. So what's wrong with that economy? That's China.
But you're assuming growth of 6 to 7%. It's plausible and quite widely accepted that China could actually be growing at 4%. I mean, this is an economy, second largest economy in the world, contributing 15% to global trade, and the world is looking at China to help drive a global economic recovery. Surely that must be a worry, Mike.
Well, I think when I think about a country, your question, are you looking short run or long run? To me, we wouldn't be even having this conversation today had the Chinese stock market, if we look at Shanghai, not gone from 2,000 to over 5,000. So if it had gone from 2,000 to 3,200 from where it was today, we would be saying to ourselves, one of the greatest markets to ever invest in, it's up 60% in a year and a half. So it's the volatility, not the underlying issue. And for me, as we step back and think about the major changes that have occurred in the world, and then figure out how they play on an individual basis. First, developing countries. The fact today that more than 50% of the world's economy is not in Japan, not in the United States, and not in Western Europe. This is a fundamental issue that underlines what's going to continue in the world. And as we cross over to where they make more than 50%. Second, education. China, when I visit a country, when I visited China for the first time decades ago, I visited their elementary schools, their middle schools, etc. I'm always very focused on what is happening with the education of the population. What is their skill set? And if you assume that 75% of the assets of any country are related to the productivity of the people in that country, and the number one example for the world to look at is Singapore, China was making this significant investment. And I remember when I first met Lee Kuan Yew decades ago, and I told him, look at India right now. They're very focused on outsourcing, educational issues surrounding, where China's very focused on manufacturing. He told me, no, just wait and see. And he told me that in China, the most prestigious thing that could have happened for 2,000 years, that you'd be an imperial scholar. You'd bring honor to your village, to your community, to your province, if you were an imperial scholar. And when I look at China and most of Asia, the fact that the middle class is spending 15% of their income on tutoring or supplemental education of their children, and more than 50% of the children in the middle class in the last decade have gone to English language schools after school. They have laid the groundwork for which will allow them to move to a consumer society and a move away from a manufacturing society. And as he was in many things, Lee Kuan Yew, pointed out. So as long as they believe, and India feels the same, and you can see it in Indonesia, and Korea is the most educated country in the world. As long as they focus on the education, they will be able to adapt. And so my view is that we are talking about these issues today for only two reasons. One, it went up so much. Had it not gone up so much to multiples or level that did not make any sense, then we wouldn't have seen the volatility. And second, that people have bet or invested for more than a decade that assumption is that the currency in China will continue to strengthen versus the dollar rather than weaken. And I remember a very famous report that CLSA put out called 5, that the exchange rate was going to 5 to 1 versus the dollar from 8. So that was working, and all of a sudden, the world changed. So I think those are the two elements. But China is growing, Asia is growing, and as they make up a larger percentage of the world's economy, and someday I would estimate make up more than 50% of the world's economy, 4 to 5% of growth will look phenomenal. We all wish
but it's 4%,
we had that.
Mike, just wondering, 4 to 5% growth for China, it was meant to help the global recovery at 6 to 7%. If it's 4% growth, it's a huge drop.
4% on 10 trillion is a bigger number than 7 or 10%, on 2 or 3 or 4 trillion. So we have to compare the size of that economy. And whether it's India or whether it's Indonesia, at the Milken Institute, we looked at the world's economies and felt at one time that 3 of the 5 largest economies in the world would be in Asia, not counting Japan, China, India, and Indonesia. And so what is the growth of Indonesia going to be over the next couple decades? And the lessons of Singapore is good leadership, good government, investing in the education of your people. The other thing that's fueling Asia and China, in my opinion, is the rise of the middle class. This is maybe one of the 2 major changes that are occurring in the world. And as you rise to the middle class, there's many things you're focused on. And one of them is the environment, health for yourself and your family. So I think as you think about what are the industries or what are the issues of the future, think about a much larger middle class in Asia. And what is a middle class looking for when it wants to operate?
I want to take it back to China from an investor's perspective. Your view on China.
Well, it's interesting because I would agree with everything that we've been talking about in the long run.
But comes to a different conclusion, right?
I'm hoping.
Well, I'm reminded of John Maynard Keynes, who reminded us that in the long run we're all dead. So, I think that I don't think 4 or 5% growth for China is a problem in the long run, but we're definitely on a glide path of deceleration, and this glide path of deceleration is having an effect on the global economy. I looked at Europe a few years ago, and I saw austerity and the impact of austerity and the drag on global growth. And now, as Europe is beginning to turn the corner, as we go through this glide path of slowdown in China, which is spilling over into all the emerging markets, now this has become the new drag on global growth. The currency situation in China. It's interesting because when I hear Mike say, the RMB was headed to 5, perhaps it was headed to 5, but this peculiar beast called quantitative easing happened. And it is very difficult for any nation to sit by and allow its currency to remain relatively stable against the US dollar while its major trading partner, Japan, depreciates its currency by 50%. And so, to me, the issue with China right now is that certain structural rigidities which have been in place, which have not allowed the currency to float freely and to make these adjustments on an ongoing basis, has resulted in a situation a little bit like what we lived in the pre-Asian crisis. And for those who recall, China devalued the RMB a number of years before the Asian crisis got going, and then countries like Thailand and other nations around the region who had pegged their currency to the dollar suddenly had to devalue, and that resulted in a lot of financial turmoil. Today, what we've seen is other nations in the region depreciate their currencies versus the dollar, and now China is feeling this big pressure, and so until we fundamentally revalue the markets, both equities and currency markets, we're going to be living with a fragility in the system that I think is going to just maintain a volatility and make many, many investors skeptical about putting capital to work.
So, I think we're not inconsistent. So, in the sense that I do think there are two spin-offs which you got to be cognizant of. One is China is getting on a glide path to slower growth, but we're just talking outside. That has to be. You can grow 8% when you're $2 trillion. To assume the US can grow at 8% at a $15 trillion economy, I mean, it's smoking, it can't be. So as economies grow in size, you have to expect a glide path of slower growth rate. So unfortunately, that does have impact on the rest of the world. Certainly exporting Asia, which turned its export engines to China after 2008. Certainly commodity exporters around the region. And certainly the global economy, which therefore cannot rely singularly on China as the only engine pulling the world along, which has been the case for the last 6 years. The truth is China at 5 or 6% still puts a Germany on the map every 4 years. So it's not negative growth. It's still creating massive demand, but it might not be enough. So the question is, can the US pick up some of the slack? Can Europe with the QE help a little bit? If they don't, then you have a slower world. If they do, then you might have a better balanced world. However, the second piece, and which is I agree with Scott, the challenge with China is they're trying to move from an administered economy to a more market-driven economy. And I think, given the holy trilemma, they're trying to do the right thing. Liberalize interest rates, deepen the capital market, which means that they have to let the exchange rate go. Right? The transition from a controlled to a market economy is not simple at the best of times. Nobody can do it. Nobody has done it. The Chinese don't understand all of this stuff. So when they do this thing, they try to tweak the tools to open it. The market overreacts. Then they try to cushion and get a soft landing by doing some measures. Sometimes those measures are inappropriate. The stock market increase, we're talking, they should have been putting potential control measures on the way up, right, as opposed to trying to do it on the way down. They did it for property. So I'm not sure why they didn't do it for the stock market and so on. So I think in that transition, there will be volatility. I think it's going to be a very choppy year. The rest of this year, I think, will be choppy early next year. It's not just the Fed actions. So if you're a market investor, you've got to be very, very thoughtful of the fact that the markets are going to be very, very choppy. You can get hurt. On top of that, China has got a third issue. As they're trying to restructure the economy, it's not just the economy, they're trying to restructure the social politics. So the anti-corruption campaign, it's again, long term I think is good for China. In the short term, it's creating a lot of anxiety in the system. And as a consequence, you're seeing a lot of winners and losers. And therefore, you will find a lot of idiosyncratic risk in China, which comes not just from the economics, but also from the social politics. And you have to be cognizant of that as well. So it requires shrewdness to negotiate through a changing China. The underlying point I have, though, that the changes that are happening in China today are of such profound consequence that you will see immense opportunity for the region and the world 5 years from now. And if you want to place your bets on a restructuring world and a restructuring China, whether it's the renminbi, whether it's Chinese One Belt, One Road, Chinese external investment, restructuring within China, more capital markets access to China, massive range of opportunities. You have to play the game smart.
I might want to just comment on that. If we pull up slide 52, for example, if we look at what was actually the basis of the creation of the Milken Institute, this formula that I had written down in Berkeley in 1955.
That's easy, Mike. Anybody knows that.
So let's start with human capital, the world's largest asset. And what is occurring if your country is based on human capital, output, etc., and talent, such as Singapore, such as South Korea, and many of these other economies. And this is the movement of China. China is moving to a consumer economy away from just a pure manufacturing economy. And as we look at India or Indonesia or other countries. The second area and the second largest asset category, social capital. This is the true strength and what is the driving strength in Europe and the US, particularly today, and Canada, is that people want to move there. When they did a survey a few years ago and found 40% of the wealthiest people in China wanted to live in the US and 20% wanted to live in Europe, they were very focused on social capital, rule of law, something that you've just addressed on. What are the issues that are going to be coming up here? What's the environment like? What are the other issues? Where do you want your children to be brought up? And these are the challenges. And the fastest growing ethnic group in the United States are people of Asian ancestry. And so that group is the fastest growing group in the United States. And then the third area, real assets. And I think these we often referred to as natural resources. And so when you look at what's occurring in the world today and the potential slowdown from China being a building economy, if we pulled up slide 4, you can see those countries whose currencies have been the most affected by this situation are those countries where they've been based on natural resources. So whether it's coal demand or oil or gas or iron ore or all these different issues that have occurred, and this causes a great deal of volatility. And to me, the volatility in the world has been more in currencies than it actually has been in markets themselves. And many of these markets have outperformed the US Dow Jones this year, but their currencies have been so volatile. And as Scott was talking about, one of the things that's been so dramatic is you can see a country like Ecuador that really operates on the US dollar. Its currency is the US dollar, versus Colombia, whose currency has been dramatically devalued. What's happened is retail sales and businesses in Colombia have increased dramatically. People are going across the border from Ecuador to Colombia to buy everything because everything is more expensive in Ecuador, which has an economy based on dollars. So it causes a lot of disequilibrium to occur. And so a downturn in China doesn't have as much effect on the United States. Less than 1% of the economy are exports to China. And it does have an extreme effect on those countries that are natural resource exporters to China as far away as Chile or Australia or Indonesia. So Today in the market, there will be many stocks that make new highs and many stocks that make new lows the same day. So it's always a market of stocks, not a stock market. It's always a bond market, a market of bond market. And I would say the changes in the world, those that rode the commodity boom, those countries that benefited greatly from it, will have far more challenges than those countries that were not based on a commodity boom.
Earlier, Mike was saying that it's more about the volatility. There's more reason to be worried about the volatility as opposed to the fundamentals. But take a look at the risks in China. I mean, in terms of investment, they're saying 46% of GDP, and take a look at the huge debt, some of which, the quality of which may be questionable. Surely those are risks in China. Piyush.
Yeah, I think the total amount of debt in the system is a concern, but it's not over the top. First of all, the external debt that China has is actually not very large, even though there's been a lot of new corporate indebtedness. But you take the total quantum of debt in China, I do some back of the envelope thing, that the organized sector debts are about 10 trillion, right? And the unorganized sector, the what do you call it, social financing, right, is about another 5 trillion, it's about 15 trillion odd dollars. And you try and do some math on what is the potential NPL in the two. The stated NPLs in the official sector is about 1.5%, so you call it 2% or 3%, right? Maybe they're all the same. So maybe they're 200-300 billion over there. And you say maybe there's 10 to 15% in the unorganized sector, the local government, etc., which is all bad. You put those together, you still get a total non-performing debt pool of circa 800 to a trillion. That's and then you apply some reasonable, loss given default to that, 50%. I mean, it's huge, but let's assume. So maybe there is a whole of $400 or $500 billion in China. Now, you go back and say in 2008, Geithner wrote a check of 700 billion for TARP in the US. A country which has no capital, no resources, they wrote a 700 billion check. You think China can absorb a $700 billion hole in the system? I think they can. They've got $3.6 trillion of reserves. So at a macro systemic level, I think that in the early part of the decade, they took 600 million and they socialized the losses. They put 200 in the asset management companies, 200 in PBOC, 200 into the Ministry of Finance. And like everybody, they kick the can down the road. So they can do that again. They'll put some of it into AMCs. They'll issue bonds against it for 10 years. 10 years later, they'll roll over the bonds. So China has the capacity to absorb the debt at a total level. The problem is at an individual sectoral level and individual level. As part of their migration, I think China will let companies go. You've already seen that in the last year. So the general belief that the state will support everybody and everybody is kosher is not going to happen. And so you're back to idiosyncratic risk. You better be sure of your counterparties because China will let people suffer.
Now, what was that term? Kosher? Everyone's kosher?
Yeah, well. So I do think there's problems in China of individual company indebtedness. If you're long sectors, steel, infrastructure, property, if you're long local government financing, if you're in the wrong municipal this thing, you can get hurt and you will get hurt. But will the country be able to absorb the debt? Will it be a big slack run thing? I don't think.
Do you see risks in China, Scott?
Yeah, I do. I mean, first off, though, I do take exception to the fact that, that the United States is kind of a bankrupt country and stuff. I just want to give you assurances. We can print more money. It's not a problem. So,
but Scott, that's the point. Every country can print local currency.
Right.
And if your debts are local currency, the Chinese can print as much money as you want as well.
See, now you're stealing my thunder, right? Geez. But with a government debt to GDP is about 40% in China. They certainly haven't engaged in anything as radical as the developed nations of Japan or the United States or Europe. So we haven't really given them a chance to turn on their printing press. I mean, so they have a lot of running room to work their way out of this problem.
I'd just like to come back because there's a fundamental issue here. If we go back to slide 52 for a moment. So we looked at this thing, FT, financial technology, and a dramatic change in the world to a digital world. Your bank is on your digital device. That's your banking, that's your savings, etc. The advantage, if we go to slide 52, of the United States has been this revolution that really began in the 1970s, where essentially the economy's growth was not based on the strength of necessarily a small banking system, and you created jobs and if you look at the percentage today of bank loans owned by banks in the United States, it's approaching 15%. So you can see this. So the United States is not dependent on the strength of any individual bank to finance the economy. And in fact, the banking system actually shrank for a whole decade in the 80s while the economy grew. This is the challenge for Asia, and one of the reasons why we've been so focused at the Milken Institute, at our center here in Singapore on Asia. Can we create private and public markets that can finance the economies today so you're not dependent on government systems or local governments in China to address this? And this is one of the advantages, but the knowledge of these systems does exist in China and other Asian countries. Why has this not developed sooner? One of the reasons is the existing banking system doesn't want the competition. And it was 30 years ago that I was in Japan trying to convince them that the creation of public and private markets would lessen the dependence on a handful of financial institutions. When Scott talks about the Asian crisis, it began in Thailand, where the whole country was being financed by 5 banks. So if the banks got in trouble, the country and access to capital was in trouble. I just want to come back to a positive here. I am guessing tomorrow will be the best day in history in the last 200 or 300 or 1,000 years for more than 50% of the people in China, more than 50% of the people in the world. So as we think about all the problems, the movement to the middle class, the access to services, the fact that your health care might be taken care of on your mobile phone, the fact of recent advances in medical research and public health and the focus on the environment will continue to extend the length and the quality of life. This is the #1 driver of the world's economy. Southeast Asia, a 70% increase in life expectancy in 2 generations. Just imagine, instead of living to 40, you're going to live to 75. You're going to think about a lot of other things, including investing and etc. The fastest growing part of the world's economy, Sub-Saharan Africa, 80% plus mobile penetration up from 2, and a doubling in a little more than a generation of life expectancy. Okay, and so you might not feel it today, but I know our moderator just visited Kenya, and you'd be shocked at what is happening in Sub-Saharan Africa. It reminds me of China 30 years ago in its quick movement as to what people think. And so these 2 drivers, whereas we might feel it was the worst day in a long period of time and there's a lot of risks, for most of the people in the world, tomorrow will be their best day for health, the best opportunities for their children, etc. And so I am optimistic on this issue.
Can I just jump in? But I want to underline something. I think one of the biggest challenges that Asia faces over the next decade is this challenge of capital. The savings pools in Asia and the capital, by and large, in many of the Asian countries is not enough. That's not true for all, but certainly many of them. And developing the capital markets, deeper and liquid capital markets is crucial. It's crucial too for China, so which is one reason it's a good thing they're getting started. But if you look at China, their total stock of capital is actually not very high. Capital labor ratios, capital output ratios are a fraction of the US. The problem is it's misdirected. So there's tremendous overinvestment in some sectors and underinvestment in others, which just means capital doesn't get priced efficiently. It's an administered allocation system that cannot work. So, but that's true elsewhere. You look at India, look at Indonesia, Philippines, there's tremendous need for capital. The banking systems in all of these countries are just not capable of servicing the investment requirements of these countries. And therefore, you do need tremendous capital availability. The good news is that in the short term, people worry, will the Fed rate, hike rates, will a lot of money flow out of Asia? And that might happen. I call it the, for those of you who understand, the balik kampung trade or the run home to mama trade, right? But the trade lasts, it means essentially go home. But it lasts a month, it lasts a quarter. If you go back and look at the data, the 93, 95 rate hike, the post-internet boom 2003, 2006 rate hike, when the US does well, and if rate hikes are because of the US doing well, money comes back to Asia. So I think there will be a lot of capital both from the West as well as from China, One Belt, One Road, Japan, Korea, even Singapore, available, but the intermediation of the capital is not efficient because of the lack of these capital markets. So that is something that really needs to happen.
Since you brought up the Fed, let's talk about the Fed. Will it, won't it? Mike.
Well, I think we're all,
I know you said it doesn't matter, but what's your take on it?
well, my take is we need to develop financial markets and mature the financial markets in Asia. And hopefully DBS will take a leadership role in that activity.
We're doing that, Mike. My business is doing quite all right, thank you.
But I do think when we think about where allocation of resources, the United States has dramatically overinvested in residential real estate. So the federal government's subsidies in residential real estate exceeded the federal government's investment in medical research and education. So it isn't just China that's maybe not allocated. Japan spent trillions of dollars and misallocated resources because it didn't really fire up their economy in the 1990s and the first part of this century. So I think we do need that. The creation of a mortgage market, an efficient mortgage market in Asia, the banking system. You know, when I visited some of the countries in Southeast Asia, many families' net worth is in colored stones and precious jewels. You don't get a multiplier effect. And so as they come into the banking system, and one of the reasons I think that was pointed out so correctly, when interest rates go up in the United States, money flows to Asia. One of the things that's occurring in the world is money flows to the United States for safety. You might not be generating a rate of return, but you know your dollar is going to be in a dollar. And so as people feel more comfortable, they will withdraw money from the United States and they'll invest around the world. And that's where we're counting on Scott to redeploy his $220 billion here in Southeast Asia. Right, Scott?
That's right, Mike. I'm just waiting for you to tell me what to invest in. But you know, to the point about tomorrow, I mean, Michael told us that tomorrow is a better day. So I assume he knows what the Fed's doing, and so everybody should go out and buy stocks today because it's going to be a good decision. But you know, I think, you know, in the discussion, I really get frustrated in my job, to be honest. Every investor I talk to says that they're investing for the long term, and then after they give us the money to invest, I discover the long term is about a quarter away. So, you know, I tend to think of the long term as more of a kind of a 3 to 5 year horizon. And when I start to look at the world on that basis, you know, there are actually some very compelling pockets in the world. I mean, when you consider Brazil, for instance, in US dollar terms, from the high in the market just about 2 years ago to today, Brazil's broad market is off by 80%. There are great companies in Brazil, and I'm not telling you to go out and buy the Brazilian index, but it's certainly a wonderful time to go shopping for opportunities in Brazil. In Africa, a company that I'm invested in with our clients, and is Atlas Mara. Atlas Mara is a company that was newly created to modernize banking on a Pan-African basis. And a stock like
Bob Diamond's.
That's Bob Diamond. Bob, are you out there? Where are you at? There he is. Right there's Bob. But you know, you look at what's going on in Africa. I agree with Mike. You know, Africa is growing off a very small denominator. It is very easy to discount the impact of Africa, but when you look at Africa over a generation or two, the impact on the entire global growth is going to be incredible. And there is nowhere in the world where demographics are better than Africa. Mike would tell us that the average age in Africa is like 19 years old. So a lot different than Europe or the United States or even China. And then, you know, I would be remiss not to talk about the fastest growing region of the world, which I would venture to say if I asked for a show of hands, virtually nobody would get, which is the Arctic. With the receding of sea ice in the Arctic by the year 2050, it is predicted that there will be no ice at the polar cap. That means a dramatic shift in the way global trade works. If you remember your European history in North America, the Europeans, when they ran into North America, spent most of their time trying to figure out how to get around it or through it because they were trying to get to Asia. And now, with the receding sea ice in the Arctic, it is possible to ship between Asia and Europe, and that shipping distance is 50% of what it is to go through any of the canal systems or around the horns. So this is going to have a dramatic influence on global trade patterns and economic development in a region of the world which largely is dominated by the rule of law and has many, many advantages which other parts of the world don't have. For instance, it's projected that within 30 years, given the growth of global trade, that it will be necessary to have a transshipment port somewhere in the Aleutian Islands or in that area, which will rival or surpass the size of the port of Singapore. So that tells you a bit of how great the opportunity is in the Arctic. And when you have places like China, when you have places like Africa, when you have places like the Arctic, which have such huge growth prospects. I understand that Europe and America, which have been the big growth engines of the world for so long, may not be the dominant players going forward. But candidly, I look forward to a world where we're going to have more equality and diversity, and where we will get growth from a broader portion of the global economy than just from English-speaking countries.
So sub-Sahara, Arctic, but you're still an Asia bull. Why, Piyush, when we're seeing so much problem? I mean, there was so much euphoria when Jokowi came to power, for instance, in Indonesia, so much euphoria that there would be change in Thailand, and Prayut Chan-o-cha is still in power and not giving it up. So why are you still upbeat about Asia? Is it India that...
India's one, but you just think about the megatrends in Asia. Those are quite intractable. So growing middle classes, large population, huge need for infrastructure, investment demand, education. I don't think these things change on a dime. So Asia was growing at 6.5%. A slowing Asia will grow at 5%. 5% is still a heck of a lot of growth on call it a $6 trillion base all in. That throws off a lot of growth, and I don't see that changing in the medium term. You talk about India. I think India is, we're quite bullish on India. So if you think about the opportunity in India, it's again got a young population, it's done well in the services sector, it's got the capacity to do a lot better on the manufacturing sector. But as we think about the nature of the reform agenda in Asia, in India, it's partly legislative, partly execution. We're quite upbeat on the changes we're seeing on the execution front, on the capacity to do business. Some of the legislative agenda has got stuck in a mire, but even within that, we see some signs of light. They've got to get the GST reform. You take Indonesia, so Jokowi's had not a brilliant start. I think the politics in his case are also been getting in the way. But in the last month or so, they've announced a few large projects. They're beginning to get some traction. And frankly, both countries like Indonesia have a lot of fiscal capacity. They can actually do some pump priming and do some big project spending if they get their minds around it. And that's true for country after country in Asia. On a broad basis, I think Asia might be somewhat slow. Asia will slow because of the China impact. But, you know, can Asia handle a couple of years of 1%, 1.5% slow growth? I think Asia can. It's not the end of the world, in other words.
Asia will still ultimately be the largest part of the world's economy. And I think you're dealing with issues of culture, and nothing goes in a straight line. So how do you marshal issues of nationalism as we look forward? You know, Indonesia is an unusual country. It can feed its own population. It has fresh water, has natural resources. It can survive and flourish as few countries could. And so the question is, what's going to happen with the educational system and other issues in the future? And will Indonesia become the 5th largest economy in the world someday? Is really not based on their natural resources and other things, but on the government leadership of that country over the next couple decades. I think the other challenge, there's so many positives, this rise in the middle class, the potential to eliminate things like cancer as a cause of death and suffering lie in front of us here in the next decade. The challenge to me, to civilization as we know it, is what are the jobs of the future? Can I have a meaningful life? And I think one of the surveys that we've seen here in talking to people, particularly between their 20s and 30s, is what are they looking for? What is important to them? And what constantly comes up, number one, is that they had a meaningful, purposeful life. It is not to make a lot of money and create a lot of wealth. And I think today we have to figure, what are those jobs? And as we change as in agriculture and technology, what are those jobs in the future? Many of the outsourced service jobs might be coming from Nigeria or Kenya or other countries in Africa where people are speaking English instead of from the Philippines or India or other places in the future. And so what are the jobs? What are people going to be doing? And those, to me, that is to me the challenge for government leadership, that people feel they have meaningful and purposeful lives.
We have just enough time to take a few questions, if there are any. I'm actually overrunning, but we'll open it to the floor if there's any question.
I just want to throw up one slide, if I could, slide 64, and maybe that'll get us some questions. So if you looked at this slide and you said to yourself, gosh, 5 million people living in Norway, and they have $900 billion sitting in their fund. And they have among the highest per capita income of any country in the world. Why is their currency so weak? And I think it's a very interesting discussion, and the weakness of the Norwegian currency this year is not due to the fact that they don't have a lot of resources or have an unbelievable amount of money per person today, and very little debt. It's really, what is the future? And in the future, if you're just based on natural resources, you have a lot of challenges. And so I think it's very important you search and for finding jobs, because natural resources, where they create wealth for a few, don't create jobs for the future. And so I just want to come back to the industries. Just having a lot of money doesn't mean you're going to have a strong currency.
Questions from the floor?
They're very shy this morning. So let's get your question up.
So, I was going to say, Hasina, since both Mike and Scott dug your Fed question, I should answer that.
We'll get to that.
Why don't you take her question first?
Hi, I'm Sharon from ARIS from Beijing. Thank you very much for a very interesting discussion. My question's about education. I heard it mentioned by you a couple of times. Education for us in Asia, or at least for our kids in Asia, is about long hours, memory, routines, practice, practice, practice. So in terms of Asia, and you mentioned that Asia may be able today consume its way out, what is your opinion on the tomorrow? Will Asia be able to innovate its way out?
Well, you know, there's a recent piece in The Economist, I think it's this week's Economist, that shows that, for instance, China is one of the fastest growing nations in terms of patents and applications for patents. So I believe that these countries, when you look along the spectrum of countries as they develop, the first thing they typically do is imitate and copy. And then after they imitate and copy and they get very productive at this, then they start to innovate. And so, I think that a lot of these countries will move up the value chain, as the Chinese have done very, very dramatically over the last 20 years. And they will benefit from the great investment in education. Mike and I both have had the great experience of knowing Gary Becker, who won the Nobel Prize for his work in human capital. And we all know that the highest return on any investment you can make is on education. So, I think that Asia is going to benefit from its high investment in education over the decades to come.
Yeah, actually, I have a perspective. You think about a large part of the innovation you see in the US, you go back and check the ethnicity and the core education of many of the people doing this stuff. They come from China, they come from India, they come from Asia. That's where they did their high school education. Many of them did their tertiary education before they went off to the US. So it seems to me there's nothing fundamentally wrong. You could obviously argue that you need less pressure, you don't need the PSLEs and the Korean exams and the Chinese and so on. I like to believe that many of us who went through the rigor of the triple Rs are actually not badly placed. And frankly, if you compare the education in many of the Western countries, the lack of rigor is something you might want to question. But my fundamental point is innovation is not a function of the quality of education per se. It is a function of the cultural circumstance in the country. The capacity to question, the situation where people are willing to let you take risks, an environment where the whole ecosystem is participative and helpful. That's not an educational challenge, that's a social-cultural challenge. And that challenge does exist in most parts of Asia. The good news is it's changing. If you look at even the universities and the kids coming out of the schools here, or in Beijing, or in Shanghai, you see more and more kids willing to take that plunge. So I think societies and cultures are changing, perhaps not as rapidly as you might want. It's also encouraging that if you look at STEM, the large part of innovation is STEM, science, technology, engineering, math. The best STEM scores and the best STEM results are Asian students. So I wouldn't blame the education, in other words.
I want to reinforce that if I could for a moment. There's a revolution going on in cancer today. And because you can sequence your genome for $1,000 instead of $1 billion, we now know that cancer mutation just didn't occur and say, okay, I'm going to become breast cancer, or I'm going to become melanoma. That same mutation, we now know, exists in different types of cancers in different parts of a human body. And so treating melanoma, you might treat them the way that you had treated breast cancer, or vice versa. The same point I want to reinforce. 50% of all the scientists and engineers in Silicon Valley in the United States were not born in the United States. So that individual following that same model, was not necessarily grown in the United States, reinforcing your point. It was the environment in the US to question, to raise your hand. I had this problem with my 5th grade teacher. I always raised my hand and said, why? Until we reached a compromise that she wouldn't try to convince me and I wouldn't disrupt the class. And so I think that is really the issue here. Can you create the environment? Philip Yeo from Singapore a decade ago went throughout the world to try to recruit the best and brightest to come here for the Biopolis. Today, the same thing is going on in China. China has gone to the United States or Europe and other countries around the world to try to recruit those students who were born in China to come back, encouraging them, particularly in the biosciences, both financially and otherwise, encouraging to come back to China to innovate. And so these individuals will move to the environment that's been created. The advantage of the United States is it's created an environment that nurtures creativity, change, etc. And last, one very short story. It was today almost 30 years ago, 27, 28 years ago, that I met with Gorbachev at the Russian embassy with Dr. Hammer, and he had their equivalent of their Secretary of Commerce. And they told me that they want to go in the venture capital business. They have great scientists, a very highly educated group of PhDs, and they want to go into venture capital. And I mentioned to him, are you aware that maybe 7 out of the 10 fail? He said, no, he wasn't. And what do you do? Do you put them in jail when they fail? And I said to them, I don't think you're ready for a big venture capital industry.
Great story.
We're actually out of time, but before I wrap up, I think we need to know the answer from Scott and Mike. Will the Fed raise rates or not? Yes or no is sufficient. Scott?
I will say no because I think they're chicken.
Mike?
I will say I don't think it makes any difference whether they do or not.
Mike? Ladies and gentlemen, it's been insightful. You'll agree. Please join me in thanking our panelists today. Mike, Scott, Piyush. Thank you.